What's up, guys, and welcome to the Junior Markets YouTube channel. This is video 3, and if you're coming in from YouTube, please make sure to check out my website. I have it linked in my profile and as well in the description of this video. In my website, I go over a bunch of these topics more in detail. This is just an overview, and if you're coming from the website, this should be the third video in the investing stage. And what we'll be going over is what to look for in a dividend stock. So to start things off, we're going to be on Charles Schwab's website. This is where I have my brokerage account, and I personally love it. So let's get into some dividend stocks and what to look for and what can be misleading when choosing a dividend stock. So I know when I was first looking at dividend stocks, one of the main things that I would pay attention to is the dividend yield. I would solely look at this and I would base if I would invest in this dividend stock or not on the dividend yield. Now I'm going to show you why that might not be the best decision and how you can choose better stocks and utilize more metrics to help yourself invest for the long term. So the first company we're going to look at is AT&T. So we're going to go to their page over here. Now, first off, if we go down to their dividends, we can see that their dividend yield is about 6.34%, which is very high among most companies. This is a very healthy number. And if you were to just look at that, you would think, wow, this is a great dividend stock. And AT&T is a well-known company. 5G is coming. 5G is fairly new. This could be a good long-term dividend stock that I could reinvest in with the annual dividend rate of $1.11, which with each quarterly payout being 28 cents. So I want to show you why this might not be the best idea and what other things to look for. So first, let's look at a 5-year chart of the stock. And as you can see, it's been trading pretty flat for the past 5 years. It was at $24 back in 2019. It's at $17 now. It's been between 15 and 20 for the past 3 years. So if you had invested in this stock 5 years ago, which when investing in dividend stocks, you want to hold for the long term, this wasn't a good choice for stock growth. But let's say that you just wanted to invest in it for the healthy dividend. So going to the dividends back to 2016, you can see here that the dividends were raised 2% one year, 2%, 2%, 2% pretty consistently, and then they weren't raised. And then from 2021 to 2022, they actually lowered their dividend 2 years in a row. Now, I'd like to point out inflation is anywhere from 2 to 3%. So if a company is only raising their dividend 2%, they're essentially matching inflation, so you're not really making any money. You want to see a number above the inflation rate. And they started lowering their dividends. So this means that even with this healthy payout of 6.43% over here, this might not have been the best stock to invest in, as even before they started dropping in 2021, they weren't even beating inflation, and their stock over the last 5 years has done absolutely nothing. So now I'm going to show you what you should be looking for and how you can choose a good company. So we're going to go over to Texas Roadhouse. And Texas Roadhouse is a great example here because as you can see, over the 5-year period, it's gone up about 117%, starting out at $54, and now it's at its current price of $171. But then if we scroll down to the dividends, we can see that the annual dividend yield is 1.45%. Now, if you were just looking at the dividend yield, you might think AT&T blows this company out of the water. But if we look at the rate, which is a little bit more than double AT&T's, and the dividend payment, which is about a little bit more double AT&T's, we can see that even though the annual dividend yield is significantly lower, the dividend rate and payout are significantly higher, and the stock has grown over the past 5 years. So now let's go in and look at dividend growth. So as we can see, coming back to 2016, the dividend has grown 11%, 19%, 20%, and then taking out this COVID drop of negative 70%, because afterwards they recovered back up to the 120, and then the normal growth rate even hitting up to 53%. So the two things to look for when choosing a dividend stock are dividend growth over time, and if it beats inflation, and if you think this is a solid company and their stock will improve. Do not just look at the dividend yield. This is the mistake that I made, and then now I actually own some AT&T and I sold it because it's not a good dividend investment. So when looking for these companies, make sure you not only look at the dividend yield, but also look at the dividend rate, look at dividend growth in the past, and then also look at free cash flow and make sure that this company can keep up paying these dividends. Because if a company is paying out more in dividends than it's pulling in, or even the numbers are fairly close, this can be a sign that a lower dividend is coming. So when it comes to choosing these dividend stocks for long-term investing, make sure you look at the growth of the dividend, the growth in the stock, and all of these different things and compile it into one. Don't just look at the annual dividend yield like I did. Now, the purpose of this video was to help you invest in dividend stocks and not make some of the mistakes that I made when I first started investing and I didn't have all of the information I needed. So I hope this helps you. And as always, check out the Junior Markets website as well as Junior Markets on all of these platforms listed. And have a good day.